Is that it is now, it is a, we are talking about the balance sheet. Now you will come across the reality, how it will work, what is the goodwill, how it is going to be done, how it is calculated. Okay, preparation, what we are doing, we are going to talk about preparation of consolidated financial statements. We will come across, I just told you, pre-acquisition profits and post-acquisition profits. Is that you will have a pre-acquisition profits, you will have a post-acquisition profits. Is that, and you will have a non-controlling interest, NCI. NCI is nothing but it relates to the subsidiary company. We are talking about what are the other components of equity, revaluation surplus, all those things. We will eliminate means debtors and creditors. Is it? Debtors and creditors. You are talking about receivables and payables. Previously, before acquisition, you have receivables, you have payables. But once there is an acquisition, definitely it will be a one entity. Okay, it will be one entity. There will not be any receivables and payables. We use the use of fair values. Okay, IFRS 13. Fine. Now you can understand the background. Is that what are the effects of fair value? We are also talking about in terms of, if there is a fair value, then we have to calculate depreciation on the fair value. Okay, in terms of depreciating and non-depreciation. We'll talk inventory, we'll talk about the monetary liabilities, payables, okay, and assets and liabilities not included in the subsidiary financial statement. In some cases, what will happen? The goodwill also get impaired. Okay, the value of the goodwill will decrease. When the value of the goodwill will decrease, how we have to work it out. Describe and apply the accounting treatment for goodwill. The most interesting and easy thing is also goodwill. Is that calculation? They will give good marks. Is there? I told you, if it is a positive, it is a positive. Is that purchase consideration? Is that purchase consideration? How much you are paying and what is the value of the assets? Is it right? If the difference is positive, is that if the difference is positive, then it is a goodwill. Now, purchase consideration is less. Is that sometimes there will be a negative goodwill also. Negative value. I will not say negative, it is a negative difference. If there is a negative difference, then it is going to be called as a bargain purchase. Is it? Bargain purchase, they will give very extreme, okay, bargain purchase, usually they will not give. Usually they will not give. But if they are giving, it means they are testing. It's a difficult paper, okay. It is usually they will not give as such. Okay. Usually they will not. Are you clear about this? Now, coming back to this. Okay. This is what we are doing. Is it right? We are having various things. What are the workings? We have pre-acquisition and post-acquisition. We have NCI. These are the working. Any intergroup tradings we will do. We will calculate the goodwill. Is that any mid-year acquisitions? Is that mid-year? Usually at this stage they will not ask. Okay. In the examination, they will ask statement of financial position or statement of profit and loss. Understand? Only two things they will ask: statement of financial position or statement of profit and loss. Mid-year acquisition. In the, if you have taken March 9/12, is it like that? You will have, when you are talking about intergroup, you will have a unrealized profit. Intergroup means you will have purchase and sales. Okay, purchase and sales before acquisition, and in the goodwill we'll take the fair values. Okay, we'll take the fair. What is the base? This is the basic principle of the consolidated financial statements. Intergroup items are excluded. I told you, receivables and payables. Before you will have receivables and payables, but once you have acquired the company, the concept of receivables and payables will hardly exist. Is it? Methods of preparation preparing consolidated. You will have you will see what is the investment in subsidiary. owned by the parent. Okay? What is the cost of investment in subsidiary? These are the steps. Okay. Next, what we are doing, this is the first thing. We are talking only subsidiary. Subsidiary investments, cost of investment in subsidiary. We we will focus exclusively on subsidiary only. Okay, exclusively on subsidiary only. We'll have when we are producing a consolidated statement of financial position, we'll add the assets of both the companies. We will take into the share capital of the group. It is only the share capital of the parent company, not subsidiary. Is it right? It is only the share capital of parent company, not subsidiary. Retained earnings, profits earned by the group, all of parent company. Parent company share historical profits plus they are saying the parent company share of subsidiary company, whatever the subsidiary company. Now, when we say post acquisition, see the things. I am putting this. You are buying on when you are purchasing on 31st March. Is that this at this time there is a acquisition? Is it this time 31st March 2024? You will get the share after purchase only. Okay, you will have the share on post acquisition profits. Is that you will have the share of parent company will have the share in the post acquisition profits. Fine. Now, fine. They gave you a illustration. Okay, they gave you a illustration. I will just mention the workings of the illustration. Is that I will just mention the workings of the illustration. No, they have not done anything else here. Okay, they have given very simple approach. Okay, they gave you a simple approach. They have added, see the things. 1 minute. Is that now you have net assets, you will add net assets. Okay, we are not doing anything. You will add current assets only. Only thing is you will not take investments. Previously you have a investment before acquisition. It will be there in every question. Every question it will be there. Investments. In the question they give investments, but the moment you are going to do the answer, here you see the thing. Investments are missing. Because what happening? You have a parent, you have the subsidiary. First you will make investments. Is that you are making investment. But once you make an acquisition, is it? Once you are making an acquisition, the subsidiary company will not be there. Okay? The entire thing is going to be taken by whom? The entire thing is going to be taken by the parent. So, in the question, and that investment matters a lot. Is it right? This is what we have to do. We have taken current assets plus, we have taken the non-current assets, we have taken only the parent company share. Is that we are taking the retained earnings also, we take the parent company plus any profits. Yes? Current liabilities, we take parent plus subsidiary. When you are taking the assets, you will take the liabilities also. Okay? Under no circumstances, see the thing, they make it very clear. Under no circumstances, any share of any subsidiary ever be included in the figure of share capital in the consolidated statement of. Very clearly, very hard hitting words. They say that under no circumstances, is that under no circumstances we are going to include this of the share capital. Fine. Now, every case there is a marks. Okay. At every stage, as a matter of fact, you will find some marks. Okay. Now, when you do the things, one minute. Right? Now, what we have to do? First working, see they have mentioned very clearly. First working, a group structure. Is that first working is a group structure. The second working is what? Means you have to mention how much, what is the date of acquisition, what is the parent share and what is the subsidiary share. The second is what? We are talking about the net assets. What is the assets at the date of acquisition? What is the assets on the reporting date? Reporting date is nothing but the 30, what has been given on the 31st of whatever the financial statements. Is the 31st December, 31st March, whenever they are preparing. And the difference will be a post-acquisition profit. Date of acquisition and reporting date. You will have the share capital, you will have the same whatever given. Is that this we will take only of subsidiary. I am repeating and giving that message clearly. The only thing is we will take subsidiary. We will not touch anything of parent. Anything we will add to the parent company, but we will not distribute or we will not. Is that we will not do any calculations on the parent company. Working 2 shows net value of net assets of the at various points in time. Fine. Second one is net assets. Third one is what? We will calculate goodwill. See the thing. Steps are very clear. We are not going to change any steps. Follow the steps. It is a piece of cake. Very simple. Parent, what is the investment at fair value? Fair value is what is the market value. NCI, what is the, we are taking NCI at here, from where we are taking the NCI from the step 2. Fine. Next, less fair value of the subsidiary net assets. We will not take book value. Which value we will take? We will take the fair value. If there is a positive value, it is a goodwill. Sometimes they mention that there is a impairment of goodwill. Then we will deduct whatever the percentage of impairment. You will get goodwill, net goodwill. How you are calculating goodwill? The market investment, the fair value, NCI share at acquisition, is it? NCI share at acquisition minus whatever the fair value of net assets. Working 3. Okay. Next, then we will divide. Okay, when we are divide, if what we'll do, what is the value of a parent company and what is the value of subsidiary company. Basically, what we'll do, we will remove all the, we'll put all the subsidiary at one place. Yeah, we'll separate it. If goodwill is positive, they will be treated as a non-current asset. If goodwill is negative, is that it is regarded as a bargain purchase, and it is and gain is included within the retained earnings. Is that if goodwill is positive, it is a non-current asset. If it is a negative, then we treat it in the retained earnings. Is that only NCI? We are not doing the thing. We are talking about what is the NCI, subsidiary share, acquisition, post-acquisition profits, any impairment, we will deduct. Okay, what is the NCI? This NCI will be there. Where it will be have? It will be in the equity after share capital. It is a liability of the share capital. You will have retained earnings. Is that you will have retained earnings, and ultimately, in the before we do the total, we will have non-controlling interest. Is that we will have non-controlling interest. Fine. This is where we are going to work. Last one, we will take the retained earnings. This is the place where we are talking in terms of parent company. The parent company retained earnings, and whatever given in the question we will take. We will take the parent share. Okay, we will take the parent share of post acquisition. Is that parent share of post acquisition? We will, if any impairment, we will minus. Is that any bargain purchase? Then we will take that into consideration. For time being, keep bargain purchase on hold, because we are not having anything regarding bargain purchase in that much in detail. Okay, but they have mentioned. It. We are talking about two subsidiaries. Fine. Is that we are talking about two subsidiaries? All those things. Okay. Now. This is goodwill, fine. Okay, then they are asking us what we have to do. Yes, just I want to say, goodwill is going to be calculated on two bases. One is net asset method and a fair value method. Is that they will ask what is the net assets method and what is the fair value method. You have positive goodwill, you have impairment. Okay, you have impairment, you have negative goodwill, bargain purchase. Is it right? You have pre-acquisition and post-acquisition. You will divide everything, you will divide in the percentage asset. Non-controlling interest with respect to the subsidiary. Fine. Now, are you clear about this? Now we will do this. Okay. Now we will make things here. Fine. Now, we will keep it in mind. 5 steps are there. Working 1, 2, 3, 4, 5. Working 1 is the structure. Working 2 is the net assets. At acquisition, reporting date, post acquisition. Working 3 is the goodwill. Working 4 is the non-current NCI. Working 5 is the retained earnings. Okay. These are the 5 steps we have to work it on. What they have mentioned, they see the things, and this is the structured same thing that will be there in all the questions. Plus you will have some adjustments, but the structure will not change. It says that they have the plant and machinery is there. Fine. They have the plant and machinery is there. They are talking in terms of investments. Is it investments? This is more critical. We will remove this. We will eliminate this. Is that investment? You have ordinary shares. You will also, what will do? You will take off all the things. This also you will eliminate. Is it right? This also you will eliminate. Okay. This is also we are doing calculations. Is it right? Ordinary shares, share premium, and only thing is we will add these two things. We will add these two things. We will add these two things. Plus, we will do the workings. Is that what they say? Deacon acquires how many shares? 16,000. When they have acquired 1st January. When they have acquired, what is the retained earnings? At the date of acquisition, retained earnings are 20,000. Share premium is 10,000. What is the fair value of NCI? Fair value of NCI is 12,005. First question to understand, very slow. If you understand this, you can do other things will be on the same pattern. Prepare a consolidated balance sheet on when? 31st December 2008. Is it 31st December 2008? Now, what we have to do first thing what we have to do, make it a point. Okay, first thing what you have to do, working 1. Working 1 is the group structure. Is it? Working 1 is the group structure. This is the parent, this is the subsidiary. Which one is parent? Parent is Dickens. Any doubt, anywhere you ask me, okay? Subsidiary is Jones. How much they have purchased? How much they have purchased? Tell me. What is the percentage? How much they have purchased? Where are you people?
Here.
How much they have purchased? They have purchased, Dickon purchased how much?
$16.
16. Is it? How much they have purchased? How many shares are there?
20.
20. Okay. There are how many shares? Means 16 divided by 20,000 times 100, it comes to how much? 80%. It comes to how much? 80%. What is the share of the subsidiary? Share of the subsidiary is 20%. Is that 80%? This is the first step. Okay. When they have purchased, date is important. When they have purchased 1st January 2008. This is the first working, and remember, for this 2 marks will be there. Is that for this 2 marks will be there? That's all. Okay. Next, second one. What we have to do? We have to do the net working 2. Is it working 2? We have what we have to do? Net assets of subsidiary only. We are not talking anything about the net assets of Jones. Okay. And now, when we are taking net assets of Jones, particulars, see the things, how we are working out. At acquisition, at reporting date. Is that at a reporting date? Is it? This is post acquisition. Is it? We are taking what? We are taking these things which have been bold, kept it. We will take the ordinary shares. Ordinary shares are acquisition. When they have acquired, they are acquired on 1st of January. Is it right? They are acquired on 1st of January. Nothing is there. Okay? Nothing is there. They have mentioned share capitals remain same. Is that? Share capital remains same. 20,000 and 20,000. It is nothing is there. Is that? You take share premium. You take share premium. At acquisition, how much is there? At acquisition, it is how much share premium? At acquisition, it is 10. Okay. Now you see the things. Anything has been done. See, share capital, retained earnings is 20,000. Share premium is 10,000. Okay. Share premium is 10,000. There also 10,000. Here also 10,000. It will remain, nothing is there, no difference. That comes here with respect to retained earnings. Retained earnings are how much? See the things. See, it has been mentioned here. Is it right? Yes. Mazin, are you here?
Yes, doctor.
Yeah. See the thing. Jones, when on first, Dickon acquired 16,000, one share of Jones on January 1st, when Jones retained earnings are how much?
20,000.
20,000. Okay, 20,000 means at the date of acquisition. At the date of acquisition, how much is the retained earnings? 20,000. But at reporting date, this is reporting date. Is that? This is reporting date. On reporting date, what is the retained earnings is there?
25.
25. Difference is how much? 5,000.
5.
Reference is how much? 5,000. Is it? Now, total it. It comes to 50.
50.
It comes to 55. It comes to 5.
5.
We are not, see, this is where it says, this is reporting date, okay? This is reporting date. Again, I'm kidding. This is reporting date. And the one which has been given, this is on the date of acquisition. Is it? This is the information of at the time of acquisition. This is the information at the time of reporting date. Okay? The first, okay? That is what we have to do. We'll take in the next stage. Working 3. Goodwill. How much they have made investment? Tell me. In the balance sheet, there is there investments in shares in Jones. How much is there?
60.
60,000. Is it right? Parent holding. Okay. Investment. This we are taking from the balance sheet. Investments. Always 60,000. Okay. Always 60,000. Now, what is the NCI value at acquisition?
58 and 160.
How much is the NCI value at acquisition? See the things. On this date, the fair value of 20% NCI was how much?
12,500.
12. They will give very straightforward. Very straightforward. Is it right? They will give very straightforward. Add NCI value at acquisition. They will give you in note. How much is there? 12,500. Steps will not change. Okay, you do 100 problems. The steps will not change at all. Okay, fine.
Doctor,
Huh.
plus NCI value at what?
Acquisition.
Acquisition.
Okay, I will write 1 minute. At acquisition. We can write like this also. Nothing will happen. Okay. Usually you will come across in all the cases if you take ACQN. Okay.
Yeah.
ACQN acquisition. You can write also. After some time automatically you will write. Okay. Are you clear about this?
Yeah.
Next.
Yes.
How much is there? 72,500. Is
Yeah.
it? Minus fair value of NCI at acquisition. From where we are taking this? We will take into consideration from note 2. At acquisition, is that? We are taking from where? We are taking it from note 2. How much is the fair value at acquisition? 50,000. This amount we will write here. Is it? This amount we will write here. How much is there? 50,000. You get this one. How much is the difference? 22,500 is goodwill. Is it okay?
5 workings or 6 workings?
Huh?
5 workings, right, doctor?
5?
5 workings?
Yeah, 5
Two?
workings. 1, 2,
Yeah.
3, 4, 5. That's all. All the questions will have same thing.
Okay.
Okay. Now, working for. Working for, we only talk about NCI, non-controlling interest. Okay. Now, we will take only what is the NCI. Is it right? NCI share. Is it right? NCI share. NCI share at acquisition. How much NCI share is at acquisition? How much? What is the percentage? How much is the percentage? NCI, what is the NCI value at acquisition? What is the NCI value at acquisition? 12,500. Is it right? 12,500. NCI. NCI share in post acquisition. Is it? Post acquisition profits. How much is the post acquisition profits? 5,000 times. How much is the percentage of NCI? 20%. Is that how much is the percentage of NCI? 20%. How much is the profits? 1,000. How much is the total? 13,500. Are you clear about this?
Yeah, doctor, clear.
Okay, see that.
Yeah.
Fine. Next, what we have to do? Now we are talking about the parent company. Okay, we are talking working 5 is what? Working 5 is with respect to group retained earnings. They have given the in the example in the group they have given retained earnings. Retained earnings of what? Retained earnings of parent. Is it right? Retained earnings of parent. How much is the retained earnings of parent?
70.
70,000.
Yeah.
Plus, is it right? Post acquisition share. Post acquisition share. How much? How much is the post acquisition? 5,000 times 80%. How much is there? 4,000. Is that how much is there? 4,000. How much is the retained earnings? Retained earnings will be how much? 74,000. That's all. 1, 2, 3, 4, 5. Okay. Now, once you have done, now nothing is there. Okay. Nothing is there. Yes, you have to make a consolidation. Fine. That's all. Okay. Consolidated. Consolidate. Now you will not have anything. We have all distributed. Okay. We have done every distribution of subsidiary. We have removed share capital, share premium, retained earnings. Is it right? We have taken off. We have not done anything on current liabilities. We have not done anything on property, plant, equipment, current assets. We have not done. We have only taken our investments. Okay. Now, whatever is remain, we have to just add it. Consolidated financial statement of financial position, consolidated statement of financial position of Dickens. Is it? When as on Is it right? As on 31st December 2008.
Consolidation statement of financial
Position of Dickens. Is it right? Of Dickens as on 31st. Fine. Okay. Now we just take the things what we have calculated. Is it right? First we'll start with what? Assets. Is it right? When we are talking about the assets, the first thing what will come? Intangible assets. Is it right? What will come? Intangible assets. Fine. Goodwill. How much we have calculated goodwill? Working 3.
Yeah, 225500.
2255. Is it? Next. What is there? What is there? Property, plant and equipment. 8518. Okay. Property, plant is how much? Property, plant, equipment. Is it? How much is there? 85 is the parent. Subsidiary is how much? 18. How much is the 85? 105, 100, 103. Fine. Current assets. We will not take investments. Okay. Why we are not taking investments? We have taken investments while calculating goodwill. Okay, we have taken investments while calculating goodwill. How much is the current assets? 160 plus 84. Is that 160 plus 84? How much is there? It comes to 0004, 8 and 4, 4, 244. Is it there? Is it okay?
244, yeah.
Total
Yeah.
how much?
Three six nine five hundred.
3695. Next, equity and liabilities. Is that equity and
Liabilities.
fine? Next, we take only parent. We will take only parent. No subsidiary NCI. Okay, subsidiary NCI. How much is the share capital? 65,000. We will not take anything of subsidiary. Only NCI we will take. Is that you have the share premium? How much is there? 35,000. Only parent. Okay, only parent share premium. How much is there? Share premium. How much is there? 35. Retained earnings. We have calculated retained earnings. Working 5. How much?
Yeah, 74,000.
74,000. Now you will add what? You will add NCI, non-controlling interest. Is it? Non-controlling interest. Working 4. Okay, working 4. How much is there?
13,500.
13,500. If we do another 1 or 2 questions, I will make sure that you will become perfect. Okay, 1 or 2 questions maximum. It's not difficult. Okay, it's not. How much you will get? 005 10, 14, 17, 1, 9, 10, 17, 18. Check.
5, 6, 65. 135.
Is it okay?
Checking, doctor. $187,500.
187.
Is it?
Yes.
Yeah.
Current liabilities. If we have non-current liabilities, we will take. If we don't have non-current liabilities, we will not do anything. We just add up the things. Okay. We will just add up the things. How much is the current liabilities? 135 plus 47. Is it 135? 135 plus 47. How much is there? 135, 45, 55, 65, 75. 75 plus 7. 75 plus 7, 182. Check.
Yeah, 182.
0, 0, 5, 9, 6, 269.
500 minus
369.
$369,500.
Is it difficult?
No, doctor, not difficult.
Yes. Yes, Hussein and Sumaya.
Yeah, doctor.
Fine.
Yeah, doctor, fine.
Now, is it? We will do this. Okay, it's a small one. Now, what they are asking? Okay, we'll work this. There are now we have told in the beginning there are two methods are there. One is net assets method and one is fair value method. Is that what is the difference? How we have to differentiate? Okay, how we have to differentiate with net assets method and the fair value method. Fine. Now, when you have they mention here, Jack acquired 60% of the ordinary share capital of Daniel, 35% for how much? 240. At this date, net assets are how much? 360. Is it? Net assets are how much? 360. Is it? At this date, net assets are means this is the fair value. Is it? This is the fair. How much they say? They said very clearly. Is it? Is it? At this date, net assets were at how much? 360. Now, proportionally, is it? They say it is proportional. When they say it is proportional, what is the percentage of acquisition? What is the percentage of acquisition? 60%. Is it right? Percentage of acquisition is how much? 60%. Okay, proportional. Proportional means as per, proportional means 60% and 40%. Is it right? And proportion of net assets. The second one is with respect to fair value. Okay, with respect to how much is the fair value? Fair value is going to be Is it? Fair value is going to be how much? 360. Okay. We have to divide it accordingly. Okay. We have to divide it accordingly. Now, a small one I will put here. Test your understanding too. Is it? Particulars. We are not writing all the things. We are only doing what we are doing. Proportional net assets method. And the second one is fair value method. How much you have purchased? Just tell me. How much you have acquired? 60% ordinary share. For how much? 240.
240.
It is purchase consideration. Is it? You have purchased consideration. Is it? Parent company holding. Okay. Parent holding at fair value. Is that which one is the? Is that you put parent? Nothing will happen. Is that parent holding? Is that at fair value? How much they have? They have purchased. They purchased for 240. Is that now? If you are talking about the assets, okay? If you are talking about the assets, now how much is the assets? 240. Is it a 240? 240. How much you will get? You will get 60%. Okay, you are getting how much? You are getting 60%. Fine. How much is the parent company? Parent is 60. Subsidiary is how much? 40.
40.
Okay, subsidiary. Net assets are how much? Net assets are how much? They gave 360. Is it? Net assets are how much? 360. Now, the parent holding at fair value. Okay, fair value. Add. Same steps what we are doing in terms of goodwill. Okay, add NCI share. Is it? NCI share. At the rate of how much? At the rate of 40%. Is it? At the rate of how much? 40%. What is the net assets at? Net assets proportional to net assets. They have mentioned proportional to net assets are how much? 240. Is it right? Is it right? See, they have said the thing. Proportional to net assets are how much? 40%. Is it right? Proportional to net assets are 40%. If the NCI is valued, point number 2 you see, if the NCI is valued using fair value method, and the fair value is how much? Fair value of NCI is how much here?
150.
150. Okay, fair value. If you take proportional, is that if you take proportional of net assets, how much will get? 360 times 40%. Is it? 360 times 40%. How much you will get? You will get 144. Proportional to net assets. Is that proportional to net assets? If we are talking again the same point, okay, again the same point. I'm not changing the point. If we are talking about the fair value, is that NCI share at fair value given in the point 2, point 2, is it right? How much they gave? They gave 150. Is that they gave 150? They will mention this 100%. 100% they will mention this. If you go to the previous question also, see the thing. If you go to the previous question also, fair value, they have mentioned here fair value of NCI 12,500. It means it is a fair value method. It is a fair value method. Is that if it is a fair? Now, how much is there? You got this one. Fine. Add it. 0,00483. 0,00093.
Will not take out the 60%?
No. 60% belongs to the parent company. Okay, 60% belongs to the parent company. Okay, 60.
Alright.
Okay.
Alright.
Now you will get 60%. What is there? What you will do? You will less net assets. Okay, you will deduct what? Net assets. How much is the net assets? Net assets of subsidiary, how much? Net assets of subsidiary. Net assets of subsidiary is how much? 360. 360. The difference is how much? 24. Here how much difference? 30. What is this? This is called as
Goodwill.
goodwill. Is it okay with you?
Net asset of
Subsidiary. Net assets of subsidiary. What is the subsidiary? What is the subsidiary here? Net assets of Daniel.
Yeah.
Net assets of Daniel.